The Starlight Global Infrastructure Fund gives investors the opportunity to invest in large, long-term assets that provide essential services to cities around the world. Investors in this fund should be rewarded with consistent dividend growth and capital appreciation over the long term. We intend to invest in infrastructure equities domiciled in developed countries around the world. Infrastructure assets are often monopolies or near monopolies that experience little or no competition and so generate extremely predictable cash flows and returns. Examples include utilities, pipelines, toll roads, and airports. The operations of most infrastructure businesses are characterized by contractual revenue or earning streams. Many of these firms are regulated by a public body that allows them to earn a target return on capital. Other infrastructure firms charge their partners a fee for access to their assets or charge the public at large for the provision of a service or product. Infrastructure firms often see revenue growth when inflation is rising, populations are growing, or even when the market allows them to raise their price. Whatever the business model, the end result is consistent cash flows that fund rising dividends and long-term returns. There is the mistaken belief that infrastructure is dominated by three sectors in the global industry classification standard: utilities, energy, and industrials. While many infrastructure businesses do fall within these three sectors, the Starlight Global Infrastructure Fund will have the latitude to regularly invest in 8 of the 11 sectors based on our expanded definition of infrastructure. This includes consumer discretionary, financials, information technology, real estate, and telecommunications services. In 2015, the Canadian Investment Funds Standards Committee concluded a multi-year review of global equity funds and decided to create the new Global Infrastructure Equity Fund category. Their analysis concluded that infrastructure funds in general behave differently than typical global equity funds in terms of risk-return profile. This has long been recognized by Canadian pension funds. The 19 largest pension funds in Canada control over $1.5 trillion in assets, and collectively they have allocated approximately 7% of that capital into infrastructure assets. This allocation trend should continue as infrastructure continues to be one of the best performing asset classes for these funds. The Starlight Global Infrastructure Fund will invest in global infrastructure corporations, but as global growth rates diverge, our investment allocations will shift. We have the ability to invest in business sectors that are more sensitive to global growth in geographies where growth is accelerating. Businesses such as toll roads, airports, and stock exchanges are all examples of potential investments. In contrast, in geographies where growth is forecasted to be more moderate, traditional utilities and pipelines should provide ballast to the portfolio. We intend to actively hedge our currency exposure and will look to take advantage of mispricing throughout the capital stack by investing selectively in fixed income and preferred equities. We are passionate about investing and excited to deliver on the promise that is Starlight Capital. We invite you to partner with us for the long term as we build this business.